Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, June 3rd, 2018. As you can see, we got a brand new website that I want everybody to check out. This is the homepage with that doofus on the front. It's a lot cleaner and it works great on mobile, which is like the first time in whatever, like 12 years that we've been at this, that we finally have a website that looks great on mobile. So I highly recommend everybody check out the new site on their phones and do that little scrolling thing you do up and down with your thumbs, and you'll see it's really easy to read content. So we're pretty excited about that. This is still kind of in beta. There's just a couple of things that probably need a little bit of cleaning up. If anybody can find anything on here that they feel is not right, feel free to send me an email at asktheshadow@shadowtrader.net. And as this develops, I'll get a little bit deeper into some of the new content that's going to be coming down the pike with the new website. All right, let's get into the charts here. The video this weekend is purposely called Sleight of Hand. Sleight of Hand as in misdirection, right? So look, I got the coin over here, and which hand is it in? And kind of makes everybody look over here while this is the hand that actually has the coin in it or whatever here. And I thought that was an absolutely perfect analogy for this particular market, because in the past week, this exact sleight of hand trick was played on yours truly, where the market misdirected me by making me focus on one thing while an exact opposite other thing was happening over here, sort of in the other hand. And what is that misdirection? That misdirection is the fact that I was focused on the weakness in the S&P, on the breakdown of this candle, which made me think that this consolidation was broken to the downside. And for a grand total of a half a day, it was. But the mistake was that if you looked at the NASDAQ comp 4 days ago, this would be the same area right here. And it didn't budge at all. And it led to this move here. That's in the NASDAQ composite. And then let's look at NDX, same thing, right? NDX, wow, even better, right? No break here. Perfect rounded cup. There was no break out of this consolidation, and you can see it was just off to the races. And the Russell, which has been leading for a while, same thing. There was just very, very minor pullback here, which closed very, very strong at the top of the range, and then the Russell moved up higher. So that's the sleight of hand that the market sometimes does, where it makes you focus on one index when you really should be focusing on 3 other indexes, or indices rather, and what they're doing. So where does that leave us now in the S&P? Well, it leaves us actually back, interestingly enough, back at the top end of the range that we were at before, which makes perfect sense because remember, the golden rule of a look below and fail is that it then targets the other end of the range. So here you have a range, you look below and you fail, you go back into range, and as soon as you go back into range, your target is right there to the other side of the range. And this, I think, bodes well for the market going forward, because I've talked about this in the past, that generally markets are out of sync with each other and they have this sort of push-pull relationship. But more importantly, what the push-pull relationship does is that when it's time for one to pause, the other that's lagging a little bit will then be moving up. And as that one's moving up, what it's doing is it's holding this one that's pausing kind of at a status quo instead of falling down. So what you have is this S&P that actually is about, I think, to stage a big rally, and the NDX already started its rally. If you look at the one-day breakout here in the NDX, this is day one. It already happened. It already started. So, you know, this is a good thing that the markets are out of sync like this, because now the S&P probably will follow, and it takes this higher, and it all kind of feeds on itself. Okay. The other thing I like in this market right now that makes me, you know, remain kind of cautiously bullish for the time being is the fact that you're so close now back to these all-time highs, which would be this triple top here in the NASDAQ comp. So that's a pretty simple move. I mean, obviously, usually markets won't just go so close and stall, especially since they very definitively already took out this piece right here. Since this prior high here has already been taken out, it makes sense to me that we probably want to retest this high or maybe even higher. And NDX, of course, looks the same. So anything that's looking bullish right now in NASDAQ 100, tech, etc., should continue to go. All right, along those lines, what are the ideas for this coming week? Let's start with an easy one, Apple. This is a pretty obvious one. Reason I say it's pretty obvious is because you're looking for the 200 number. I think the time frame is going to be probably in the monthly options expiry. There's an immense amount of open interest at the 200 strike, which makes sense on June 15th because it is a regular expiry. It'd be wonderful if we had a pin there. I would probably be playing around that 2 to 3 to 4 week period. Give the options some time to move up to that 200 and be selling against them, bringing in some premium as we go. But this is definitely a pretty healthy consolidation for Apple after a huge move to the upside. So there should be a break in that direction, which would make sense. All right. Next thing I've been looking at is airlines, which is the XAL index. And look at how weak this has just been. I mean, as crude has been strong, this has just been destroyed. But numbers-wise, I mean, these airlines are really doing well. I think this is really just all on the heels of the crude going down. But the numbers are actually solid. And look at that 102 range in there. I looked at a lot of names, but I really like Love the best because it has also been beaten down, and it kind of looks just like the index. And I wouldn't be surprised if this starts to put in a higher low. The best case scenario for Love would be if that XAL I just talked about went to this area and Love actually at the same time didn't go lower. Love actually just bounced around and never actually tested this 49.75 area. So keep that in mind. That sort of relative strength versus the index is very, very important. Okay. Healthcare is another space that looks good. That's DJUSHC. It just feels like it's crowding the plate to the upside. Look at this consolidate. It's actually the same pattern as the SPX, right? This kind of mirrors the SPX. So if you believe the SPX is going to rally, right, there's a look below and fail. You're going to get a move probably up to here in the healthcare stocks. And if you look at this pattern, as I said, it's just like the SPX. So again, if you're bullish on the SPX, you want to look at these. And 3 names stuck out to me. One was Cardinal Health, also because it's been beaten down pretty badly. If you look at here, it's a first higher low on this chart, and there's a possible gap fill here. That's going to be interesting. I think it's a little bit clearer, I think, at least on the weekly, because it fills in this gap, and you can see it's just kind of failing to go lower. An interesting point might be right about here, around the 55 level, which would take the stock higher. And the reason I say this 55 level is because then it would really brand this whole area here as a look below and fail, because it's not a definitive low. It's really just a very minor new low. There's just not enough downside there really to get more sellers excited. Gilead is also in this space. This is just a classic kind of bottom fishing gap fill. Pretty obvious here. The stock gapped down on earnings, but since then has done what? Has really failed to go lower. And usually this will dribble up to here. So small play would be like a 69 to 72 target there. And also in that space, ESRX, which I think is interesting for the pattern like this that is the sort of V-shaped cup and handle like that. Kind of makes sense to me that this could actually push a bit higher as well. All right, so that's the Shadow Trader Video Weekly for the June 3rd date. Again, ShadowTrader.net, new website. Check it out. We've got some new stuff happening there. It looks real pretty. Check it out on your mobile. Cautiously bullish here at the very least, I think, until the NASDAQ can touch back to that all-time high. I'd watch the NDX for you. I think the NDX is a much clearer picture. And at this point, again, looks like it's kind of smooth sailing here. I wish I could say I was involved in all of this move, but I really only got involved in some NASDAQ stocks like on the breakout on Friday. And again, that's because the market did a sleight of hand trick on me and made me look at the SPX when in reality, what was really happening was NASDAQ. All right, on behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading